Evening, ladies and gentlemen. I'm Hassan Tamiriagal, Manager Corporate Finance and Strategy. On behalf of my team, I would like to welcome all of you to Sunshine Holdings' second quarter earnings webinar for FY26. To start things off, few housekeeping announcements. So as usual, this webinar will be recorded and then later uploaded to our IR website as well as the CSC website. So you can use the following link to access the presentation as well as the webinar recording. So during the webinar, all participants will be muted. And in the Q&A session, you can use the raise hand option to ask questions and I'll unmute accordingly. Or you can use the chat box function to type in your questions as well. So similar to previous quarters, we'll start with few corporate announcements for the period. Then we'll move on to group highlights for the period, followed by a deep dive into each of the sub-business segments from the respective business heads. And then we'll end the webinar with a Q&A session. So first, let me introduce the team. So from Sunshine Holdings, we have Mr. Shyam Sathasiva, who is the Group CEO. And then we have Mr. Arunadipti Kumar, who is the Group CFO. From the respective businesses, we have Mr. Shanta Bandara, who is the CEO of Sunshine Pharmaceuticals, as well as Healthcare Distribution. And then also we have Mr. Farman Nizam, who is the CEO of Healthcare Pharmacies. On the consumer side, we have Mr. Amrut Daluvihare, who is the CEO of Sunshine Consumer. And then we have Mr. Sanjeev Sarnapal, who is the CEO of Sunshine Tea. So with that, I'll move on to the corporate announcements. So during this quarter, Sunshine Holdings has declared a first interim dividend of 60 cents per share for FY26. The exit date being 17th November and the payment date will be on the 5th December. So similarly, whatever the plantation also declared a first interim dividend of rupees 1.70 per share for FY26. With the XD date being 14th November and the payment date to be on the 3rd December as well. So with that, I'd like to hand over to Mr. Shyam Sathasiva, who will kind of take you through the group highlights for the period.
Thanks, Sasunda. Good evening, ladies and gentlemen. Thank you for joining us for our second quarter investor webinar. So Sunshine's had a good quarter. We've had growth across agri, as well as healthcare and consumer in our revenues. So our revenues are at nearly 16.5 billion for the quarter. And this continues our quarter-on-quarter sort of growth momentum that we see. Earnings have increased by 11% year-on-year, 2.8 billion. We've had some challenges in terms of tax temporarily, as well as in our leaner manufacturing. I'll take you through each of those later. Overall, the company is on a very strong footing. We've been able to deliver on our return on equity, and we continue to see positive momentum in the earnings, as well as in our recognition in the market in terms of price earnings ratios and market cap as well. If you look at the first half, we've again continued the momentum coming across quarter one and quarter two. Our earnings to EPS for trailing 12 months is slightly lower than last year, same period. This is an impact of both something in manufacturing as well as some tax impact, but this should recover. Our ROE continues to stay where we want it to be at 20 plus. And we continue to see momentum in the business health. As you can see, GP margins are above last year, and so are EBIT. And this you'll understand more as we go through each of the sectors. These results have been with you in terms of the profitability of the business. So I will move on to my colleagues explaining the business elements to you.
Thank you, Shyam. Yes, thank you, Shyam. And good evening to everyone. Let me take you through the healthcare overall sector performance, and I'll be also presenting 4 of the BUs out of the 5. As Shyam just mentioned, we have a positive growth for the quarter, which is 1.7% year on year by the end of first half. of the healthcare sector overall. But you may see that a little bit of a dip in terms of profitability that is mainly coming off from our low sales to the government in our manufacturing business. And as mentioned, some of our one-off tax provision adjustments that we have done in terms of in compliance to the accounting standards. So that's the overall picture. I will, to get a better understanding, probably I'll take you through the other sectors, the sector details in terms of BUs. First being the pharmaceutical business, which is the agency house. You may see a significant growth of 64.8% that year on year in the first half, mainly driven by the model change that we did in the first quarter of this financial year. The model change being we moving out the warehousing part to our distribution business, where this business will purely manage operations in terms of brand building, where we have transferred our warehousing sales activities to our own distribution business. However, when we adjust and also looking at the RD segments where the real sales happen in terms of at pharmacy level, we recorded a 9.1% growth in the overall business, which is very positively backed by a 9.4% volume growth, whereas the market was growing around 6% and the overall market was growing around 7.3%. Moving on from the agency business to our distribution business, where we see a steady growth in our revenues, where we recorded a 17.4% year-on-year growth, which is backed by a 21.4% of a volume growth. Now, here again, this is where we have focused during Q1 and Q2 in terms of developing the last mile servicing business. We signed up with new agreements with some of the leading pharma companies, and we have started doing their distribution in the last 6 to 8 months, where we are seeing positive results. So with that, I'll move on to our medical devices business. The medical devices business also have recorded almost a 7% year-on-year growth, while the business has contributed very well during the first half of the year. Although moving from a quarter to quarter, it has been challenging for them, but overall growth has been quite positive for the devices business. Moving on from the devices business to our manufacturing business. Again, where I spoke about the manufacturing business compared to the previous year, same half, we have seen a decline in our growth, in our revenues, mainly coming out from our sales to the government, where there is timing effect and various other factors are involved. However, the business from a quarter one to quarter two has been positive 2.7%, and we look forward in this business where we are very much focused in capacity utilization and increasing our productivities to enhance the overall outcome from this investment. So with that, let me hand over to Farman, who manages the retail business, HealthGuard Retail. Farman, over to you.
Thank you, Shanta. Good morning, ladies and gentlemen. So I will now take you through the HealthGuard pharmacy retail business. As you all can see from the chart, the business has been steadily, solidly moving forward, quarter-on-quarter growth as well as year-on-year, a healthy 13% growth. This is far above the market growth, so we are happy to continue to achieve these numbers. The profit metrics have performed better than the revenue metrics that you see. If I were to comment on the wholesomeness of this growth, I can actually comment from 3 points of view. One is this growth is primarily driven by volume growth. It's not a price growth. It's predominantly volume-driven growth. So that tells us it's real growth. Second, it is grown even at the same store level. You can say it's 9%. We had a new store which was launched in May in Malabe, which helps us move it to 13%. At the same store level, it's 9%, which is good. And also, 9 out of 10 stores that we have are keeping to the same trajectory in its growth. That's something we are proud of. Third, from a bill count point of view and ATV point of view, we have seen more growth in bill count. We're happy that more shoppers are embracing and patronizing the store. If you look at the price of medicines from last year to this year, the prices have been reasonably stable. The improvement you see in ATV is due to increase in the purchase basket, what has gone up by 2%. Now, one of the reasons that has actually helped us, there are multiple challenges like all of us had to face, is the availability drive. Now, you can see we are closer to 90% on 45% of our SKUs in medicine, which is the core. We call it top SKUs. So we are actually really trying to monitor that and trying to move the availability metrics higher. That's been really helping us in maintaining this growth momentum. So those are some of the key features of health card performance. We can take up questions later. So now I will move on to hand over the baton to consumer, and Anuruddha will take it from there.
Thank you, Farman. Good evening, everyone. So I will briefly touch upon the consumer sector highlights, and then Sanjeeva will take you all through the export business. So overall export sector, we are recording minus 1.5% year on year, and quarter on quarter, it's 4.2% growth. This has no impact to the overall profitability of the segment. Overall profitability is very healthy, I would say, at this point in time. Moving on to consumer business. Confectionery business. Tea business, our tea segments delivered a strong performance this quarter. Revenue, we are recording 8.3 year on year, reaching 2.6 billion, driven mainly by regional specific activation and brand building efforts. Our core brands, Zesta, Butterwella, and Grand Carter, continue to perform well across all three tiers that we are representing. Volume momentum strengthened, recording a 16.5% quarter-on-quarter growth, reflecting increased consumer demand. And market share stayed resilient at 49.9%, excluding modern trade and SMMT. The market share is reported without modern trade and SMMT at 48.9%. So this indicates that we are overall above 50% of the market for sure, reinforcing our leadership position in the tea category. Moving on to confectionery. So in confectionery revenue, revenue declined by 5.5% on year, largely due to high competition within the category. However, we saw a positive sign of recovering revenue, improved by 5.3% quarter on quarter, signaling momentum building back. Volume also improved 6.3% quarter on quarter, supporting the revenue rebound. Market share for the quarter averaged 14.6%. This reflects stabilizing despite the competitive environment. Overall, while the year-on-year performance was impacted, the quarter-on-quarter trend remains encouraging. With that, I shall hand it over to Sanjeeva for export section presentation.
Thank you, Anuruddha. Good evening, ladies and gentlemen. Let me present you an overview of our export business performance for the second quarter financial year 25-26. In terms of volume performance, during the second quarter, Sunshine Tea recorded a 12.7% year-on-year growth in export volumes. The strong performance was largely driven by heightened demand from the Middle East and the Far Eastern markets. However, this growth was somewhat offset by a decline in shipments to the US market, mainly attributing to the recent tariff adjustments that affected the competitiveness in that market. Looking ahead to Q3, we anticipate a further uplift in demand supported by upcoming festive season across the US, Europe, and the Far East, which traditionally drive higher consumption levels. In terms of revenue performance, in contrast to the volume trend, total export revenue for Q2 showed a decline, reaching rupees 1.9 billion, a 9.3% year-on-year decrease. When measured in USD terms, revenue also reflected a similar contraction. This was primarily due to the reduction in demand for high value-added product categories, particularly moving to the US market. Despite the short-term revenue dip, the continued growth in export volumes and expected seasonal demand provide a positive outlook for the upcoming quarter, with opportunities to regain value through product mix optimization. Thank you. That's it from Sunshine Tea. I'll hand over to the Waterwella.
Thanks, Sanjeeva. So on our agribusiness sector, primarily two businesses, oil palm and dairy. Broadly, the sectors had a very good sort of quarter coming off last year, 23% year-on-year growth, and continuing to grow from last quarter as well. EBIT has been quite high, driven by high palm oil prices and cost maintaining. This business, of course, is impacted always by the global palm oil prices. We've now had a steady pricing across quarter one and quarter two. Specifics of palm oil. So here what you can see significantly is the revenue growth. This is driven primarily by pricing growth. The CPO oil that we've been selling has fetched a 25% plus price increase over last year. So that continues to drive the growth and profitability here. We continue to push for high quality, low contaminant oils, premium products, and consistent productivity to drive volumes. In terms of the dairy business, challenges here in profitability, while revenue has grown quarter on quarter as well, we've had issues with EBIT. This is to do with significant costs at effluent management. Projects are underway to resolve these, but into this quarter as well, we've continued to face these headwinds. The price versus cost gap is also point of challenge, and hence can't manage sort of significant shocks in terms of cost structures. But volumes have been quite stable and continue to increase. So that's all segments of the agribusiness as well as the rest of the business. Back to you, Asantha.
Okay. Thank you, team, for those detailed insights into each of the business segments. So with that, we can move on to the Q&A session. So as I mentioned earlier, you can use the raise hand option and I'll unmute. You can ask your questions. If not, you can use the chat box function to type in your questions as well. The first question is from Ruchit. When do you expect the year-over-year revenue decline in Lina manufacturing to stabilize? And what are you seeing in the current quarter in terms of... Sorry, yeah, I will take that as two questions.
So Lina is, as you're all aware, it's primarily driven by the calendar year government business. Orders are given out in the end of the year, and production is expected to be finished by quarter three itself from government perspective. Last year was an overrun in terms of pipe fill as well. We received enhanced orders. We continue to see increases even in this particular quarter, but this business will have that cliff of quarter three, just October to December quarter being higher than Jan, Feb, March. So we expect good orders. We already have orders in hand, which we need to complete by early December. But things are stabilizing more in terms of order scheduling by the government as well.
Thank you. A question to you, Anuruddha. What are you seeing in the current quarter in terms of the confectionery business volume?
Yeah, confection, it is very difficult to gauge the volume because we have a range of about 49 SKUs, and volume is not a direct match to value. So therefore, if some items volume goes up, value comes down. So that I will not go into volume in detail, but we are, in terms of volume, we are around 94% YTD, and we are maintaining the same volume trend for Q3 as well.
Thank you. Question from Anju. What is the impact on Vata and Sun from the recent budget proposal to slash import duties on palm oil and introduce VAT?
Sure. So it's still at this stage, they're talking about the special commodity levy, which has been applied for imported oils, both crude and refined, being replaced with the VAT and SSCL, etc. We're still waiting for details of the Gazette in terms of impact. This will have some impact, but I think it's still early days till we get the exact Gazette to see between refined finished goods coming in versus crude palm oil, which we produce, and the alternates, and therefore the net pricing impact. So I think that's where the impact will be better felt.
Thank you, Shyam. A few questions from Harini. This would be a question to you, Shanta. Have any measures have been implemented to increase the market share of the pharmaceutical sector?
Yeah, let me answer that. Surely, actually, some of our key agencies' portfolio has been a little bit of a challenge. You may see a little bit of a dip that you see from quarter on quarter when you look at the market share. One is that we have regularized our reporting, because we had certain businesses where we were doing only sales and distribution, where it is more relevant to our distribution business, where we are not taking those products to our calculation. So that's one correction we did there, where you see a dip. Even if you adjust that, there is about a 1% market share issue that we have currently. 2-3 areas that we are focusing. One is that our insulin business have shown a decline. Two issues that we see. There is a shift into from insulin to oral, that we see a shift in that. There is new oral treatment which has come, and some even are locally manufactured. So there is a price war in certain products where we have seen some of our brands have lost market share. And the other is that one part of our human insulin is being phased out by the principal. So therefore, in the next 1 year, so we will actually be losing that. Hence, we have seen a decline in those supplies, and some of the products have gone down. Hence, there is a hit. And some of our leading principal agencies also have had volume challenges in some of their brands. So a few measures we have taken on our long-term plan. One is to actually revamp some of those brands, and also to introduce new products, which we have I would say a lot of work has been done in that area. And we see some of those registration are coming through now. So we see in the next 2 to 3 quarters, some of the new products, starting contributing to the overall portfolio, which we see as positive. And we would expect and anticipate for those segments to pick up market share for us. So many plans with few of our leading and new products which in the pipeline would actually correct the market share challenge that we have right now. I hope I answered your question.
Thank you, Shanta. Just a follow-up question on that. Will the pharmaceutical sector continue to focus on government orders, or will it explore other market opportunities?
In terms of Lena, I think the focus have been also in manufacturing for third parties and building third party business. So that there is a lot of focus in that area. If Group CEO wants to pitch in, he can. However, the government orders also have been a key point for us. So it's a timing effect where we supply and the orders are allocated and awarded in a particular manner. So therefore, there is always a timing effect. But Lena Business main focus is to build more third-party manufactured brands. There's a lot of effort being put in that. In terms of our devices business, some of the government selling will continue where we have focused on the private market. In terms of our pharmaceutical business, we are largely focusing on the retail front. Our government business, in terms of pricing and supplying as per requirements, have been quite challenging, and pricing has been a high challenge issue for key brands. So therefore, in the pharma business, we would continue to focus and do a lot of work around the retail business.
Just to add on to Shanta's context on government, yeah, definitely in the manufacturing business today in Sri Lanka is still very heavily skewed towards government supply because of the regularity of orders that we're all receiving and the overall macro shift from imported to local manufacture. So that continues to be the primary strategy for local manufacturers at this point. But we have diversified. We are doing about 85% government, 50% or so is the private market. So that will continue to increase. On your question on capacity, we have continued to increase capacity. Yes, we hit 90% for the quarter per se, but we continue to enhance capacity. We will be significantly increasing our metered dose inhaler capacity so that we can scale beyond current government business, go into more private as well as export opportunities as well.
Thank you, Shan. Few questions on Vata side. What is the expected impact on the proposed wage hike on the company's bottom line?
Yeah. Well, I'll take that question. Thank you for the question. And wage hike impact approximately annually estimated figure is approximately 80 million for Q4, effective from January onward. Last 3 months, it's around 20 million, the bottom line impact.
Another question on Vata side. Does Vata possess sufficient land for planting in the event the palm oil cultivation ban is lifted?
Sure. So at this point, we're not talking about new cultivation. The government has banned both new cultivation as well as replanting. Our negotiations with the government has been to allow replanting. So we have about 1/3 of our fields. We have a total hectare of 3,400 hectares of oil palm. About 1/3 have crossed the 25 plus to 28 year sort of age, which would be ideally when you hit about 20, 30 years, replant so that you get better efficiency over the years. So initially, all plantation companies will focus on replanting, right, on existing. There will be no net hectareage increase. That will require further negotiations with government for new approvals to expand plantation. So clarifying again, the initial ban lift is to allow replanting so that we can drive more yield per hectare. Because typically it's a 30-year cycle that you need to reinvest. And that's been prevented the last 5 years. So we're hoping for that ban to be lifted. Thereafter, in negotiations, there is opportunity for expansion, but that is yet to be seen and heard.
Maybe just a follow-up question on that, Shah. Prince has asking, if I'm not mistaken, the current palm yield is expected to start decline between 2028 and 2029. due to lack of replanting. What is the alternative plan if the government does not lift the palm oil ban?
We will cross that bridge at that point. We are quite positive, even in our current wage negotiations, a critical condition to move the wage from 1,350 to 1,550, 200 rupees that the companies are willing to pay, which, as my colleague Aruna said, will cost us 80 million plus, is with this expectation of lifting the palm oil replanting ban. We're quite positive, because it's in the national interest to allow for these plantations to get replanted and to drive higher yields per hectare.
Thank you, Shyam. A question to you, Aruna. What is the increase in tax expense during the quarter that led to the drop in profits?
Yeah, as Shanta explained earlier, there's a business model change that basically for the warehousing from the import agent to the distributor, where it's a legal entity, Sunshine Healthcare Lanka, where we have made a incremental tax provision based on the turnover and the profitability. That is the impact coming from to drop the profitability for this quarter.
Thank you, Aruna. Hope that answered the question. A question from Dinesh was wondering if the advertisement had any measurable impact either in terms of public response or sales figures. Question to you, Anuruddha. This is from Waterfall side.
Sorry. In terms of sales, we have not had any impact to the business. The month of October was one of the best months in terms of confectionery, tea, and all that. So that's the answer in short. No impact to the business. Hope I have answered.
Thank you, Anuruddha. Another question to you. Can you brief us the impact of changes to the SVAT system on the tea export business and an outlook on the future auction prices? A question to you, Sanjeev.
Yeah, so the VAT system was implemented in October. So it's a bit early days to actually say what the impact will be in the industry. The government has assured that the payments will be done within 45 days of receiving, which calculates to about 90 days. Initial impact was there in the market where there was a decline of about 100 to 150 rupees per kilo. But that has now adjusted and gone back to the normal levels. So what we would see, we'll have to wait and see in the next 3 months. If there are any delays in the VAT refund, then we may see a drop in the prices at the auction. But as at now, it has come back to the normal levels. Thank you.
Thank you, Sanjeev. A question from Shalini. The MDA utilization was at 91% despite slowing of government orders. Have you received new orders for the current quarter?
Yes, we have received enhanced orders for the year per se. So usually the government gives us an annual order around October, November for the year ahead. And by about July, August, will give us an enhanced order based on your liquidation and availability. So we have received an enhanced order for the year.
Thank you, Shyam. Question to you, Shanta, from Shalini. Will you also be looking at the possibility to introduce oral medication that substitute for insulin?
Yes, certainly. We have actually started some of the regulatory process on them. So some of the dossiers are in progress, and a few brands we have already registered, which are actually picking up. So we are very much in that as well, and we just need to pick up more volumes on those. So we are working with our principal agencies to increase the penetration, and very much active work is going on that.
Thank you, Shanta. Question from Krishna Kumar. the dairy sector recorded lower compost sales. Is this a one-off or expected to continue?
So we did have lower, generally demand for organic compost has been lower than expected. And so we continue to add value, and we continue to engage both with the RPCs as well as beyond in terms of cultivation areas, farming, vegetable growers, etc. So the team continues to push for new avenues for compost sales.
Thank you, Shah. Question from Rahul. Will the dividend payout remain the same?
Management does not comment on dividend.
There's no further questions. We can wrap up the session for this quarter. On behalf of Sunshine Holdings PLC, I would like to thank each and every one of you who joined this quarter webinar, and I hope to see you all again in our next quarter webinar as well. Thank you. Good evening.
Thank you. Thank you very much.